Here, they have said that they pay their employees by cheque every month and maintains a wages control account. And a summary of last month's payroll transactions are shown below. So what we have got here is our gross wages, income tax, employers and employees, NI, okay, and then as well as that, employees and employers, okay, pension contributions. Okay, so what they want us to do here is record the journal entries needed in the general ledger for the wages expense, the HMRC liability, net wages paid to the employees and the pension liability. So what we have got here for each one in turn, our little double entry journals. So for our first one, for our wages expense, what we must always remember here, this is the cost to the company of employing the individual. So what we must remember here, that when calculating this, that this will be made up of not just the gross wages of 18,293, but the employer's national insurance contribution and the employer's pension contributions as well. So if we added up all of those three items, the cost to the company, that will be shown as an expense in the account. So it will be, to show that an expense in the account, it will be, the expense will be as a debit of that total of those three, which is 20,675. And we will therefore credit, for the same amount of course, the wages control itself. As that's all that the control is there to do, to show where the money is going and to whom. So great. So for the second one, for part B, they wanted down here the HMRC liability. Now, what we must remember here, that with this one, this is not just going to be made up of, like before, the employer's NI and the employee's NI. The other item here that is also going to HMRC is the income tax as well, of 5192. So if we add those three up, we will get a total here of 8556. And this one, we will debit now the wages control, and that is because we want to show the liability, the amount of money that we are due to pass on to HMRC, which is a liability. So that liability will be as a credit. So great, really good, excellent. So our first two are done. For part C, they have said record the net wages to be paid to the employee. Now, with this one here, we will start with the gross wages, but we must think now what deductions are the employee themselves making here in order to come to their net wages. So yes, the employee will have income tax deducted from their gross wages, and the employees will have employees' national insurance contribution and employees' pension contributions as well. So if we take away income tax, employees' national insurance and employees' pension contributions, this will therefore mean that the actual amount of money that the employees receive into their bank accounts are 10,919. And as we were saying, we will still debit the wages control, and that is because we want to credit the bank, and the fact that our company's cash now, as we pay these employees, will have fallen. So to reduce that asset, we credit it. So really, really good. And our final little transaction was our pension. okay, liability. So this is just the sum of our employers and employees pension contributions, which if you added them both up, we don't need to go back here, 800 plus the 400 is 1200. And as again this is a liability, it will be a liability and a credit to the pension company and a debit to the wages control. So really, really good. Excellent. So that was the first part of this task here. Now, what we are told next is that a credit customer, Marbles Limited, has ceased trading, owing Pennington the amount outstanding shown in the receivables ledger. Okay. What they want us to do, therefore, is record the journal entries needed in the general ledger to write off this debt, including the net amount and the VAT. So, first of all, what we can see up here is that we were owed originally 595 by Marbles. We invoiced them for 1276. The credit notes then against the account 650 and 525. So all of this therefore means is that the total amount owing to us are going to be 696. So, and how I've come to that is that if I balance off this T account, which the higher side again is the debit side here, which comes to 1871, well, so should therefore the credit side, and therefore I have a balance carried down for 696. So I know this is the amount that I have to write off. And will therefore, if I wish, for my receivables ledger control account, it will be that 696, that total gross amount that I will be crediting from it. That I will be removing from my receivables ledger. But what I want to show therefore is this bad debt expense, and this is where I have to separate out the bad debt and the VAT. Now I know that 696 is the gross amount, and so therefore to get back to the net amount and the VAT amount, I will have to divide that 696 by 1.2, as that is 20%. So if I do that, 696 divided by 1.2, that will therefore mean that the bad debt expense, the net expense, will be 580. And this will be a debit as it's a cost. And the remaining amount then to make this journal balance must therefore be the VAT element for the remaining 116. And this too will also be as a debit to our accounts. And that's it. In task 6, here we are given a suspense account that's open to a balance of 2580. The error has been traced to the following transactions. So we have a cash sale for £12,900 plus VAT. And how this has been recorded, as we can see just here, is we debited the cash 15480 and credited VAT 2580, but we also credited sales as well 15480. So we can clearly see here that this journal is not balancing, as the credits far exceed the size of the debits. So what they want us to do is to record the journal entry needed in the general ledger to remove the incorrect entry that was made. So first of all, what we must do, as we said, is that as we need to credit our sales by the net amount, and actually here we have gone with the gross amount of 15480, we need to first of all go to our sales account and remove this incorrect entry for the full amount of 15480. And to do that, therefore, as previously we have credited it, we will therefore now need to debit it. And once we've removed the total of that incorrect entry, we will then need to then put in the correct amount, which as they said was 12,900. And now we will credit that correct amount. And lastly, to remove the suspense account, we will of course therefore go to the suspense account, and this is for the difference between the 15,480 and the 12,900, so which is 2,580. Okay, and to remove that suspense account here, we will have to credit it. Okay, to get that suspense account back to zero. So good. Now, we are also told a further error has been identified. And this is for the entry of interest received from the bank of £1,200, which has been reversed. So what we need to make sure that we do here now is, like last time, remove the incorrect entry. So for this here, if it's interest received, in order to do that, we will go cash 1,200. So for that, and debit. But to then, as well, for the interest received for 1,200, we will credit that interest received account. But here, as they have reversed that journal, not only here do we have to debit the cash and credit the interest received, as they got the journal the wrong way round to get us back to square one, but we then have to repeat the same journal for what actually should have been posted in the first place. So for the correct entry, this will be the exact same. So still it will be £1,200 debited to cash and £1,200 debited to interest received. Just so the two. One is to cancel out the original transaction, the second is to post what should have originally been posted. And the final part for this task 6 is they have said identify whether the following statements are true or false. So they have said, first of all, the suspense account balance should be reflected in the final account as an asset or a liability, dependent on whether it is a debit or a credit balance. Please remember here, a suspense account is there to help identify that there are errors, that there are issues. So there should actually never be a suspense account at the final year end. So this is clearly false. They have also said a suspense account always exists if there's an error in the account. That too is also false, as we may have made errors, but not always will this lead to a suspense account. We may have posted to the wrong type of expense, but the account will still have an even amount of debits and credits, but there's still naturally an error there. And that's what leads us to true with the final one, that the suspense account will only exist if there is an imbalance in the trial balance, i.e. the debits are greater than the credits, or vice versa. So really, really good. So in our penultimate task, task 7, which is for 10 marks, Ava runs her own business. Most of the ledgers have been closed off and the balance is included in the trial balance for the 31st of July. What they want us to do here is to complete the remaining ledger accounts by inserting and calculating the balance carried down. So quite a straightforward task, this one, as we can clearly see here that for our payables ledger control account, as we can see here, we have got our T account, so our balance brought down of 4429, our purchases of 2743, and we have paid out of our bank 4188, and that will therefore mean that for both sides to therefore be equal, that the balance carried down must therefore be 2984. And as this is the balance carried down on the debit side, it means the actual account balance is on the credit. And this is the same for when we are looking at things like our sales down here, which, as we can see, would, using the same principles, be 6077. For our discounts received, would therefore be 104. And for our electric down here, 475. Okay. So really, really good. Excellent. So that is all that they wanted us to do just to begin with. And all that they wanted us to then do is, using that information then, is place each figure into the correct column using your answers. So this isn't just for the ones that we have just been doing, but for all of these accounts. So for petty cash, which is an asset we know, remember in our principles of dead click, will be on the debit side. So will be 145. And bank overdraft, so that's a liability, so it'll be on the credit side. So it'll be 1345. Capital is always part of the dead click itself, will always be on the credit side, so that 10,000 will be just here. And then we have our machinery, which is a non-current asset. So an asset here of 12,540 will be on the debit side. Receivables ledger account, again, that is our debtors, what we are owed, so that too is an asset, so it will be on the debit side of 3243. And that payables ledger control that we just had last time, which is a liability, and we said would be on the credit side of our trial balance. So that 2984 will be just in here, so we can put, and let my pen will let me. So that 2984 we can put just in here. And will therefore come in as a liability just here. But with our rent then, which is an expense, so will be a debit of 1238. Loan from an investor, again a liability, so it'll be 5,000 on the credit side. Our sales, which we said was 6077. So that sales is always a form of income, so it'll be on the credit side. Purchases is an expense, so that will be on the debit side of 2743. And just going through all of these here, so for sales returns, so if sales is a credit, our sales returns must be a debit for that 584. Purchase returns will be on the credit side for 290, as purchases themselves are an expense, so therefore on the debit, so the returns must be on the credit. And then our discounts allowed, and remember here, this is an expense. It's the money that we are willing to forego to get the rest in earlier. So this 526 will be an expense, so will be on the debit side, whereas that discount received that we had before of 104 is the saving that we are making, so reducing that expense to us by paying early, so will be on the credit side. And then our final few for our miscellaneous expenses, still it's an expense, so will be on the debit side for that 83, just like we had our non-current assets earlier for machinery. We have non-current assets for motor vehicles, which are still assets at 2345. Motor expenses of 193 was still an expense, so therefore a debit, as are wages of 1203, just different types of expense, but still an expense. And for electricity as well, all the same, these are just all different types of expenses here. So that was 475. Telephone, again another type of expense at 312. And interest paid as well, the exact same. All that we must remember then is that for our interest received, this is again another form of income, so we'll be on the credit side at 24. And what we can always then do to make sure that our trial balance balances is we can total up all of our debits and all of our credits, and they should both then come down to a final balance on both sides of 25,824. And we know that if that is the case, we must be right, unless we have got absolutely everything the wrong way round. But great. Excellent. Okay, so in our final task here, task 8, again we will be focusing more on the trial balance. And here, on the 31st of March, Pennington's trial balance was extracted, but it did not balance. And the debit column of the trial balance totalled 115,117, whereas the credit column was 115,106. So all they've said here is what entry would be needed in this suspense account to balance this trial balance, so to make both sides equal. So what we would clearly need here, and this will always go to the account name of suspense, is the difference between the two accounts, which we can clearly see is for £11. And to make that credit side then as equally as big as the debit side, we would have to credit the suspense account £11. So both sides are then 115,117. Now, what we are tasked with next down here is that they have said on the 1st of April, 2 journal entries were prepared to correct the errors that had been found and cleared the suspense account. The list of the balances in the trial balance and the journal entries to correct the errors are shown below. And what they want us to do is to insert your figure for the suspense account at the 31st of March from A, and then redraft the trial balance by placing the figures in, like last time in task 7, the debit or credit column. You should consider the 2 journal entries which will clear the suspense account. So what we have got down here is that we are told our trial balance with all of the original amounts, and here are our 2 journals that are going to clear it. Okay, so we have got the suspense for the commission received, sales and suspense as well. So, a lot of these accounts here are not going to need any adjustment. Only those very few that relate to those specific journals. So, just, all we have to do here for a lot of these, like machinery, which is an asset, is just say and show that this will be 43,549, as it's an asset, would be a debit balance. And the computer equipment, the exact same. No adjustments or anything being affected here. So that 22,340 can come in here. Petty cash as well, another type of asset, will come in here. Our bank overdraft, though, remember, as it's an overdraft, is a liability. This 849 that we have just here. So that will be a credit balance. So that is absolutely fine. But our receivables ledger control, 5290, nothing being affected with our journals here. Our payables ledger control, 4309, is a liability, so it'll be a credit. Our capital is always a credit balance at 10,000. Our drawings, always a debit balance here at 534. We then have our bank loan of 7,000, which again, just another type of liability, so will be a credit balance. And for our VAT owing to HMRC here, so be careful with that, as it's owing to them, it's a liability, and therefore this would be a credit balance. If they had said owing from HMRC, well then that's an asset, as they are due to pay us money. So for all of these first few here, it is just a case of taking each of these balances and saying whatever they are, an asset, a liability, an income, an expense, and putting them then into the correct debit or credit column. What we do have next though then is our sales of 87,681. But as we can see just down here, we need to debit our sales, i.e. therefore reduce okay, our income by 191. Okay, so if we do take our sales of 87,681 and deduct that 191 from it, this credit balance will now be 87,490. The purchases, no change here, is an expense, so it would be 34,409. Sales return, so if sales, as we know, is a credit, as it's a type of income, any sales return will be a debit, as it reduces that income. If purchases are a debit, as it's a type of expense, purchase returns will be a credit, so that 984 will come in here. Our discounts allowed, is always an expense, so will be a debit, whereas our discounts received is always a type of income, so that's 643 will come just in here. And then what we have got just below then is our other little area where we have a journal, our commissions received, and this is a type of income, is our commissions received. So what we need to show here is that this income for commission received is going to increase as we are crediting a type of income by £202. And so therefore, if we increase our commissions received by £202, so add on 202, this will now be 1439. So really, really good. And all that they do subsequent to this then is give us our expenses for wages, office expenses, rent and rates, light and heat, motor. These are all just types of expense. And so therefore will all be debits in our accounts. Even down to, as well, our interest paid. Just again a type of expense. Whereas our interest received, we know, again, is a form of income, so will be a credit balance. And what we always then know is that by making these journal adjustments, there will be nothing left in that bottom suspense account. And we can double check that we're right, that by now adding up both the debit and credit columns, both now come to 115,117, and that is without there being any suspense account. And we know then that we must have tackled this correctly. And that is all that they were asking of us here.